It's time for another technical indicator, this time Bollinger Bands. This is video 18 of our Forex trading training series, brought to you by forexminute.com. Bollinger Bands are used to measure market volatility, and in this video I will demonstrate how to use Bollinger Bands to identify areas to potentially join trends, and how to use Bollinger Bands as a signal to identify when a trend has come to an end. Bollinger Bands usually have 2 or 3 settings. The settings of my Bollinger Bands in this video are 20, 2 and 0, which are commonly used settings for Bollinger Bands, and if you were to add Bollinger Bands to a chart, more often than not they will be set at these settings as default. You may find your Bollinger Bands only have 2 customizable settings, and if that is the case, then 20 and 2 would be those settings. This is a daily chart of the Australian dollar, US dollar. I have my Bollinger Bands on the chart. You'll notice the Bollinger Bands consist of 3 bands: the upper band, the middle band, and the lower band. When price downtrends, you'll notice that price generally stays within the area of the lower and middle band. When price uptrends, you'll notice that price generally stays within the area of the upper and middle band. When price uptrends and price breaks this middle band and price touches the lower band, that can act as a signal that the uptrend has now ended, and you'll see in this case that it is. When price is downtrending and price breaks this middle band and touches this upper band, that can act as a signal that the downtrend has ended, and you'll see soon after this upper band is touched, this downtrend ends and we start an uptrend. So how can we use Bollinger Bands to join a trend? If we were to identify this downtrend, perhaps we could have marked this high here. Price then breaks this high, comes back down and is rejected against this high, and price falls on the downside. So we have a head and shoulders pattern, one shoulder, head and another shoulder. We could also notice that price pushed or pulled back on the uptrend. It went for another push and broke this previous low, and we have a lower high. Identifying the head and shoulders or this pattern could have led us to conclude that price is going to downtrend. So price is downtrending, we're in between this lower and middle band, and the way we're going to use the Bollinger Band to join a trend is we're going to look for a signal to join the trend, either a pin bar or engulfing candle, but we want these pin bars and engulfing candles to appear around this middle band. The reason being, when price downtrends, it usually stays in between these bands, and you'll notice each time price comes up to this middle band, price goes for another push on the downside. So we have an engulfing candle that comes off this middle band. That's our signal to go short, and price falls on the downside. Price once again pulls back. We reach the area of this middle band and we have another bearish engulfing, and price falls on the downside. Price reaches this middle band again and we have a pin bar followed by a bearish engulfing candle. Either one of these signals would have made very little profit or a loss. So 2 out of 3 signals were profitable. Price then touches the upper band, which acts as a signal that this downtrend is over, so we wouldn't be looking to go short again on this downtrend. Price then uptrends. It could be that we identify this uptrend in a similar fashion to the start of this downtrend. We have a sort of head and shoulders pattern. Here are our shoulders and here's our head. Or it could be that we noticed price pulled back and created a higher high and then has come on the downside and reversed. So let's look at this uptrend. Price pushes on the upside, price comes back, we touch this lower band that can signal this uptrend is over, but at this point there is no uptrend. Our uptrend is only confirmed when we go for another push and create a higher high and a higher low. So price now moves in between this higher band and this middle band. We have a bullish pin bar around this middle band. That could have been our signal to go long, and price moved on the upside. If we didn't take that signal, maybe we were a bit concerned that this middle band had been broken. There's another opportunity here. Price pulls back and we have a doji on the middle band, or a bullish engulfing to that doji just around the middle band area, and we create a morning star. So that's how to use Bollinger Bands when trading Forex. Let's go back. You'll notice there's another downtrend here. Price stays in between the lower and middle band. We have a very short uptrend here. We have a bearish engulfing off the middle band, signal to go short, and we have a bearish pin bar here off the middle band, another signal to go short, and both of these positions would have led to a profit. This is current price of the Australian dollar, US dollar. This is today's price action. Price is still uptrending according to the Bollinger Band. Price is moving in between this upper and middle band. You'll notice that price is starting to come away from the upper band, so we may see price fall back to this lower band, and when that happens we're looking for some sort of bullish signal, either a pin bar or an engulfing candle, and that will be our signal to go long and hopefully follow price as it continues on the upside. To summarize this video, Bollinger Bands identify areas to join trends, and Bollinger Bands can signal when a trend has come to an end. In the next video I will be teaching another technical indicator, parabolic SAR.